Hello traders, welcome to another Trade Your Way video. Just want to do some quick analysis today. We're going to start with the pound dollar, so cable. It's at interesting levels right now. So for the last 3 months we've been talking about longs to $1.40. So let's explore that move. So far we are seeing 139 being tested, and so it's going really well. This is a monthly chart on my trading view. You can see that we are going to retest the previous highs, which were back at the start of 2018, consolidated for 4 months before we dropped. So we've got that range on our radar. A key level here is the 76.4, which is around 136. Let's have a look, 136.70 area. So we have tested that area, and we do have around 137 round number. We do have a nice 127 fib extension, which we did take a divergence trade at the start of the year, last month back in January, short from 137 until we got back down to 134.80 area, 135. And I did explain that, and that was divergence. That was a good 200 pip move. So that was a good week for shorting, because it took about a week for it to drop. Let's have a look where we're at right now. So we're on our way up to that 140. This is a weekly, so we're just exploring this current pullback. So the last pullback down to 126 from that 134.80 area, and now we've been very bullish. So we continue to be bullish, and we continue to look to buy the pullbacks. And any short trades are counter trends, so carry a higher risk. We've only looked to take a few shorts based on divergence, so exhaustion of the price action. And now that we've broken above the 76.4, around that 136.76, I'm not interested in going short until we dip back down below this level. But it looks pretty bullish, and 140, we might get a reaction off that 140 area, because we've got some clear divergence around 140 to 141. Again, drill down a little bit more. Let's just have a little look, see that price action, and let's pull it down for you. That's what it looks like. Drill down to 4 hour, and we're just stuttering at the moment. So we can explore this last pullback and this last move, which was on Friday. If we drill down to a 1 hour and put some fibs on here as a fib extension, and so we're looking at 138.90 area, and also 139.20 to 139.30. So we could well see some divergence and some exhaustion. If I show you this on my charts here, so just to recap, weekly, it's broken on through that 76.4, broken through. There's a clear path to the upside, so we could get as high as, obviously 140 might react off that round number, but if it carries on going up, eventually we are looking at well into the 140s. So we're not going to do anything in terms of trying to short this market, not for the moment anyway, until we are done to the upside. If we do see any pullbacks, as seen on, say, the daily and the 4 hour, then really all we're looking for is for price to give us pullbacks so that we can buy into these moves. And so that for us is really what we're looking for, and that's what we're interested in. Bullish bias, keep buying it. Have a look at the daily very quickly. That's that move I just showed you on the trading view chart. So we're just grinding up, keep going up and up and up and up and up. We are looking for 139.80 to 140, 141, somewhere up there, which is quite a nice move if we can get up there. So yeah, just keep looking to buy these pullbacks. This is the 4 hour very quickly. So we've seen that divergence, clear divergence here, waiting ultimately for prices reacting off this level. We may well see a reaction, so waiting to see if we do get a reaction off here to drop back down to around 138.66. So 138.66, maybe 138.70, depends how how strong the move is. Note that it is a US holiday today, so volume may well be thin for the forex markets as well as all the other markets. So yeah, just going to wait and see. It's Monday, and not in any rush to do anything, but just to let you know, and just to highlight the divergence and the possible pullback. So if anyone's trying to buy up here, might not be the best place to be long. There might not be much range today, so maybe 20, 30, 40 pip range might be quite thin. So let's just see what happens. Ideally, I do want to see some sort of a correction to the downside and some pullback with divergence. This is the 1 hour, and we're just taking into consideration the last breakout, which is when we had the price consolidated, then it dipped. So we're just monitoring and measuring that move. We've had another pullback. So yeah, just want to see how it pulls back. But any correction or any pullback to the downside may well present some buying opportunities again for the remainder of this week. Hope that has been helpful to you in terms of how we apply divergence and the power and relevance of divergence to help you gauge price action and not just then buy at the top or sell at the bottom, or more common occurrences to see traders try and think that the top's done, and so they'll try and short it without really understanding that there's more to the upside potential, and without seeing any sort of divergence, and just basically guessing that now's the time to short, or in some cases when the market's falling they'll start buying into a move down again, not really using any real structure, just guessing that is the bottom, when in actual fact it's not the bottom and it could continue a lot lower. And so with divergence, that just helps you navigate price action a little more accurately, because it will tell you that the bottom is not in or the top is not in until you see divergence, etc., as one of your main confluences. So that's why it's such a powerful indicator. And we use the volume from the awesome oscillator down here, which is a volume indicator. So it tells us how much volume there is, which is another way of gauging. That's what we use to gauge divergence, which is what these yellow lines are. Any questions, please get in touch, let me know.